Hello,
Yeah,
everyone. Welcome
yeah.
to Life Behind the Art, featuring Joe Wallace. This is the Art of Credit, and it's going down today, right now. Siege, what's going on?
Hey man, I feel good. Hey, look, is my button too high? Cause I feel like it's all the way at my neck, man. But that's
Yeah,
just how I feel.
it looks a little tight.
Well, that's just how I feel, man. We gotta tighten up. You feel me? Hey man, I'm excited about today's guest, and what's gonna happen, man. I don't know. I don't know if the people know. I don't know if the people really understand the type of information that they are able to get right now in this live. Tell us, man. Who we got? Tell me about
Man, we got the one and only, the serial entrepreneur, Joseph
it.
Wallace. I mean, this guy is a self-made serial entrepreneur leading multiple business entities and living the American dream in upstate South Carolina. He has over 14 years of business management experience, operating successful companies on the executive level to being financially responsible in his role for managing accounts, averaging 55 million per year. I, I'm gonna say that again. Responsibility in his role of managing accounts, averaging 55 million per year. Uh,
55 mil per year.
55 mil per year. Joseph Wallace now operates, owns, and manages his own business entities. He leads the parent company, May Wealth Management Group, which is a corporate umbrella for a multi-level chain of companies that he established. Another company owned and operated by Mr. Wallace is Master Credit Consultants. This company specializes in credit repair, credit restoration, and credit building. He also leads the marketing and new client acquisition team for the Pyramid Group with Keller Williams, a residential real estate company in Spartanburg, South Carolina. The three businesses coexist as cross functional units as their functions drive the success of the other. Additionally, Mr. Wallace recently launched May Cares nonprofit to enhance the quality of life of youth and citizens through community initiatives, education, and improving the community's economic livelihood. He's a member of the Chamber of Commerce. He's a business coach, a part of the Chamber of Commerce Minority Business Accelerator Program. He's a joint entrepreneurship instructor at Spartanburg Community College. He's the executive director of Wine Make Cares nonprofit. I mean, this guy does a lot.
I'm gonna be
And
honest, man. That was a long bio right there, man.
yeah,
But
yeah,
listen, that tell me that this guy better be like that for real. And here's what I know: he absolutely is. And I cannot wait for you guys. I'm gonna see how long I can last. The next message about my neck size is not a problem. I'm gonna see how long I can last with it tight like this, man. But y'all need to tighten up and do the same because right now we're about to
yeah.
get some information that could change your life, that could change your whole trajectory. Get this information right here, Life Behind the Art of Credit and Finances and everything that he finna tell us about right here, LBTA. Yep.
Let's go. There you go, Mr.
There you
Wallace.
go.
How's it going?
Good evening.
Man,
Good
we
evening, man. Good to see you. Looking mighty debonair. You ready for this? You ready to
I'm
give out?
ready. I'm excited. I'm excited.
It's like a
You know,
superhero.
talking
You
about
know,
my passion.
when they use too much of their power, then they like, oh man, that's how I feel like you are when you get this information. Like you laying it as a superpower. So I'm ready.
and it's
I'm ready.
important that everybody share. Uh, this information will allow us to level up as a community. Man, credit is really, really important. So make sure if you're tuned in right now to share, get as many people as you know to tune in and watch because the knowledge and wisdom that Joseph Wallace is about to share will be life changing if you apply it. Yeah. And so we ain't gonna procrastinate. We're gonna hop straight into it. We got an hour to go for the interview, and so let's do it. So,
Go ahead,
Joe,
man. What we got, man?
the first question, man, because I'm big on this, right? Uh, I want to know who you are and what you have accomplished before, listening to advice that you want to give me. I want to know that you've been through some things. I want to know, like, who is this cat that is sharing this information with me, and how do I know if it works? And so, tell us about Joseph Wallace. Who is Joseph Wallace, and what inspired you to become a serial entrepreneur?
Okay, good question. Joseph Wallace, I'll start from the beginning. I am originally from Miami, Florida, born and raised. Um, I spent 7 years in the U.S. Navy. I did search and rescue. From that, I spent the last 11 years in the upstate of South Carolina. I'm a serial entrepreneur. I operate different facets and I own multiple businesses here in the upstate. I'm a husband and a father of a beautiful family. I am a philanthropist, which both of you guys know. We're involved in the annual Christmas toy giveaway that we do down in Greenville, and we expanded into Spartanburg, South Carolina as of last year. So, man, I consider myself as a positive role model for the community and for our youth. I'm always constantly trying to spread wisdom, knowledge, and positivity. And the future that I see for myself is that the children and the generation that comes behind me. And I know when I look back to my youth, and I always seen myself getting out of that low income area. Sometimes only thing that we see is football, basketball, sports, rap music, and we think that's going to be our only outlet. I want to show our children and that next generation that you as an entrepreneur can achieve that same success that's going to be sustainable, not just short term, but long term.
Oh man,
Awesome.
morning. Just hearing that, can I just ask one question that ties in with that? Why the upstate? I mean, you got all this knowledge, this vision in Florida, right? I mean, why the upstate?
Good question. So actually, I feel that Holy Spirit brought me here. My mom moved out here for a job promotion, and I came out to visit her back in the early 2000s. Probably 2003 I came, 2006 I came to visit, and I was in San Diego, California, and I was going to move back to Miami, Florida, and I had my daughter, and I'm thinking, you know what? I think I want to move over there because she was asking me to come. And I prayed on it, and I just followed that holy energy. And I came here. I thought, you know what? If I moved to the upstate, no disrespect to the area, but what I seen Greenville and Spartanburg was like Miami in the 90s. So I was like, if I could get in early, I could help shape that city.
Wow.
Okay.
Wow. Okay.
So,
Now, that's real, right?
Opportunity. You're right.
Yeah.
Opportunity.
And it's funny because in a place that so many people feel like we have to leave and go somewhere else, and you see it as like Miami in the early 90s, saying that, and look how it's expanded. Look at the hub it's becoming now in those 20 years. So that's listen to that insight, ladies and gentlemen. Let me just dive into this. What is personal credit and why is it important? Let's start there. I mean, what is it and why? Tell me about it.
So personal credit is an individual's credit score, which is controlled by FICO. FICO creates a FICO scoring model, which is based around your payment history, your debt to credit. I mean, I got time to go over the whole thing.
Well, just you
I
go.
want to dig into it. I want to share this knowledge. So, what is personal credit? Your personal credit is based on 5 factors, and that is your payment history. If you have a credit card, a car loan, a mortgage, your payment history is the largest factor of your credit. It makes up 35% of your credit. Your debt to credit ratio, which is how much credit do you actually use out of the credit that you borrow, that makes up 30%. So for instance, if I have a credit card and that credit limit is $1,000, if I spend 300, I have a 30% debt to credit ratio. Okay. So online, they advise you to keep it around 30% or less. I try to provide the knowledge to say, you know what, it is best to stay around 10%. or less. Even if you spend 30%, when that card payment is due, pay it down to 10% or less. Because between that 10% and that 30%, there's points to gain. So you always want to maximize on the points that you're able to gain to help increase your credit score. The next largest factor is your payment history, and that makes up 15% of your credit score. Hold on, I'm sorry, is the age of your credit. That makes up 15% of your credit score. So the age means if I open an account back in 2018 and that account has age, I have 2 years of age. So the longer age I have on my credit, then I'm able to maximize on that full 15% to help improve my credit score. If I'm just starting, if I'm 18, 19 years old, and I just open up a credit card and that credit card is 1 month old, then I don't have age on my credit. So I need to establish what that does. It shows lenders that that individual can manage credit over a period of time.
So we're at 50% right now. Okay.
Sure.
So I'll just say we're at 50% right now. And so you're telling us that it's really a game of with that first factor holding 35%. We like to get it and maximize and use it all up, but it's really showing them that, hey, I can utilize it efficiently without using it up. Like it's not a crutch for me. It's
Right.
something I can maintain and handle, and you have to show them that that's how you're using your credit to your
Right.
advantage versus as how you're functioning. You know what I'm saying? That's a crutch. Okay, I get it. Okay.
Yeah, and it's important, and it's important to understand the difference when we talk about that between an installment and a revolving. Because an installment, if I go and buy a house and that house is $200,000, then my debt to credit is going to be high for an extended period of time because it's going to take me a while. But if I have a credit card and that credit card has $1,000 credit limit, and I go and max that card out, and then the next month I only pay the minimum due, then it from to a lender's perspective that I don't know how to manage credit, because if I was to give him credit, he's just going to go and max it out.
Wow.
Okay. Well, this is really important to know, y'all. Really important. And you can go ahead, Joe.
So we talked about your payment history. That's 35%. Your debt to credit is 30%. So that totals to 60%. 65% right there. Your age is 15%. So right there, you talked about 80%. Next, you have mixed credit. That's 10% of your credit. And what that is a combination of installment and revolving. And the reason that you gain points on that, because you're able to show a lender that you're able to manage revolving credit, that if I have $100,000, I'm not just going to go and max it out and spend it. If I have $100,000 in credit, I can still maintain keeping my debt to credit ratio at 10% or less. And then installment, it becomes important too with mixed credit, because they want to know that you not only can manage revolving credit, but you can also manage installment credit. That if I take on a big debt like a home payment or a auto loan, that I could manage that account, make those payments on time. And lastly is new credit, that I'm not just going out there and just applying for everything every time that I have an increase in my credit score.
Man, just by you telling us what those aspects are tells us how important it is, because I know a lot of us don't have an understanding of that this is chess, not checkers. What you got, News? This is good, man.
Yeah, it's important. Trust me, I learned the hard way. Man. At the lowest, dude, my credit score was a 384.
Wow.
3 years ago, and I ain't talking about like 17 years ago. I just turned 29. Just had my 29th birthday. 3 years ago, when I was 26, with a 384 credit score, but with knowledge and tools like what Joseph Wallace is saying, and things that he helped with, man, in a year and a half, I was able to increase that to over 620 and brought our first home. You know what I'm saying? And we brought our first home, like going from a 384 credit score in a year and a half to be in a position to buy your first home. And it shows me that that it's possible if you work it and if you have the right people in your corner. And I know there's people listening right now saying that, oh man, my credit jacked up. Ain't no hope. Like there's no way I can, purchase something with my credit, and I'm gonna be going to buy here, pay here, core lots for the rest of my life, and having high interest rate loans for the rest of my life. And so I might as well settle with that. No, there's possibility from experience that I believe, and so from a professional like yourself, Joe, and just tell us about with your experience. Do you see a lot of people recover from bad credit and lots of debt? And tell us a little about positive steps to build and repair credit.
Good question. I want to step back because, Terrence, you said something very important, how you came from 384 and got to 620. You was able to qualify for a home mortgage. You was able to purchase a home for you and your family. And why that's important, because not only were you able to use that credit to leverage and be able to obtain that asset, which is key. Now you own an asset. And that's why credit is so important, because when we think about, I hear all the time, we're trying to get wealthy. I want to be that first millionaire in my family. But we have to understand how important credit is to help achieve those things, because there's not too many millionaires that got there off of like cash. And that's just facts, right? So you have to understand how to
it, right. Yeah.
Right. So and it's through borrowing. Always these subdivisions out here in the upstate, they're borrowing. They're not throwing out $15 million. And right. So, and it's always through, they have to build up credit. That company had to build up credit to be able to be approved for that $15 million loan. So, and what's important about what Terrence said is now he can be able to leverage that asset in the future to continue to build, because now that asset could become a rental property in the future. If he hold on to that property is going to continue to build out equity in it, which he could at some point and pull out that equity and use it as an investment tool. Like, it's so many directions. So that first step by him applying and improving his credit and obtaining that asset, he's creating in the future what could possibly be the next vehicle or avenue to create a wealth building asset, not only for that one home that he currently owns, because that one home can become two homes. Then them two homes become three homes, and then five homes.
Can I just say, because I seen this debate going around on Facebook. I stayed out of it because I just said I can't get in this. But they were like, people are really arguing about why you saying that you own a home or something like that, or you might as well say you renting too or something like that. What's the point in buying? And it's like, man, there's this whole theology or whatever, that is really trying to discourage us from having an asset because we have such a small understanding of what that is. So I'm glad you went on that spiel right there. We needed to hear that. So the two in the comments, you need to run this back.
Yeah, and I don't get into those responses. Only thing I do is try to share wisdom. I don't like, debating. I just like to share positive energy and knowledge. And then I allow people to make their own decisions from that point. But from my perspective, as an entrepreneur, as a successful entrepreneur, and being able to utilize credit to create wealth, we're going to talk about that in the future, right? Hopefully, on the call, we're going to talk about how to use your credit to create avenues for wealth. But let's
do that, and we'll make sure everybody gets a pen. No, I'm serious, y'all. When we go into that, I'm telling you right now, it's going to light a fire inside of you. So you're going to need a pen and paper just to kind of jot this down. So yeah, we have to go into that. I want to jump straight into this if I can. What I'm gonna say, the B word. I'm gonna throw the B word out there. All right, bankruptcy. What are your thoughts regarding bankruptcy? I've seen some go bankrupt and they use it as a tool, right? I mean, what are your thoughts in regarding that?
When I talk to a client and they bring up bankruptcy, I always see it as a last resort. You always want to look at that as a last resort, and it's not a bad thing. So if you have a client possibly just got out of a divorce and they're drowning in debt, that may be their only outlet.
Right.
So then you have to consider what's going to be the best route for them if they need to do a chapter 7, which is when it's a liquidation, bankruptcy, and saying that they can't pay that debt down, or they need to do a chapter 13 because they may bring in enough income where they may just need to reorganize that debt, and make payments on that debt or lower the balances on that debt. So, but I always want to look at it as a last resort, because then you have to consider too having something lingering on your credit file for like 10 years too, depending on what chapter that you choose. So
Gotcha.
if there's when doing a credit consultation, we always want to look at bankruptcy as a last resort. The majority of the time, if you do a budget analysis for someone, the majority of the time, there's ways to avoid that bankruptcy.
Okay, so I know in our last question we kind of skimmed over it, but tell us about some of the ways to avoid bankruptcy. What are some positive steps to build and repair credit before getting into that last result?
Right.
Thank you.
Your question, Terrence, was can you recover from bad credit and debt, right? So
Yes.
going back to that and how to build from the best thing is to be proactive, right? Proactive and preventative, and avoid that. And the way that we avoid that is by calls like this and through knowledge. So being able to understand how to do a budget sheet, understand how much income do I bring in, understand what's my expenses every month. So if I bring in $2,500 every month and my expenses is $2,000, then I should have $500 remaining. But if I'm going month to month and I find myself check to check, then there's areas of opportunity there, because there's money remaining, but it's not being distributed properly. So you have to understand first, how do I fix that sore? Not put a band-aid over it, but let's address that sore. And once you're able to fix that person perspective on budgeting, being able to be disciplined and understand credit, because credit, it again works a lot around your finances. So if you're able to create a budget and say, I know how, if I bring in X amount of dollars and my expenses is X amount of dollars, then I know how to, after I cover all my bills, I have a remaining amount that I could put into saving and then investing. If I'm at a point where I have bad credit because of decisions from the past, or I have debt from the past, then how do I get myself out of that? The first thing to do is, again, go back to budgeting. Because if you have debt and you say, again, I'll use this as an example, you have $2,500 of income and you have $2,000 of expenses, but you have loan payments and credit card payments, but now you have $500 and you say, I have left over after paying my bills. Now I can pay extra on this, and now let me try to get this debt out the way. Debt 1 is gone, so now I have that extra income every month. Now I'm gonna focus on debt 2. Now debt 2 is gone. Now I got debt 1 and debt 2 of extra income every month, plus that $500. Again, it goes back to having the knowledge of how to budget. If you already have bad credit, being able to understand how we talked about the FICO. So what's hurting your credit? So is it collections? Is it late payments? There's ways of handling those things on your own. If you have collections, contacting those creditors and saying, you know what, I have an account on my credit and I would like to do a settlement, or if I'm able to do a pay to delete on the account, I will pay the account if you agree to remove it off my credit, because I know that's going to help to improve my credit score. And also in the future, when I apply for things, that underwriter or that computer that uses that algorithm to check my credit is not going to deem me for that. So if you don't have the experience, then I always say consult with the expert. So
Yeah.
you can always contact Masters Credit Consultants if you feel that, you know what, I'm at a place where I need help. I got Terrence, I got a 380 score. I need help. What do I do? You know, and it doesn't take you anything to contact us because that call is free. To walk through your credit file and explain to you what's hindering your score is free. So you're paying nothing but taking the time to gain that knowledge.
Right, and it's really important. I cannot stress that enough. Vital, like it's a total difference from having a 384 credit score to having close to a 700. I mean, the swag is different. I mean, you have more confidence. They treat you different when you pull up the car dealerships. They treat you different when you apply for different loans and mortgages. When you have that type of credit score, I mean, you have people. If you have bad credit, you can have a 2008 Buick or Toyota and be paying the same thing that someone with good credit is paying for a newer model Mercedes. The same thing, right? And so, which one would you rather be driving? The 2008 Buick or the newer model Mercedes, right? And paying close to the same amount. And so credit is really, really vital.
Let me interject on that, Terrence, because it's important that we understand that not just like the type of car, but it helps to break that cycle. So the parents that's online right now, they need to educate their children. They need to be preparing their teenagers that when, you know, if it's me and I have a child and they're 17 years old and I have that credit card that's 18 years old, I'm adding them as an authorized user. But I have two cars, I'm adding them on two cars. So when they turn 18, now they're starting off with a 720, 750 credit score. So now when they get that first vehicle, that changes the game because it always starts at the root, at the beginning. So you got to fix that score. So that child don't go out with a 550 credit score getting that same car that you just used as an example, that 2009, that they're telling them you got to put $2,000 down on because you have no credit. And now I'm driving a 2009 that has a value of probably like $3,000, but I just paid $6,000 for it, and I'm paying $300 per month. So now the car, even though it's value less, now it's still depreciating, and I'm paying way more because I got a 28% interest rate, and the majority of my car payment is going toward interest, not the principal. So when that car breaks down in 2 years from now, because I have 150,000 miles on it, now I go to try to trade it in, and they say, well, I could give you $800 for it, but I owe $5,000 on it. So now here it is, 2 years later, I'm stuck in this cycle, and that cycle just repeats. I'm 30 years old, stuck in a cycle that started at 18.
All right, hold on. Okay, now I almost don't want to do this because this is so good. But you know, people got to use the bathroom and stuff like that. So we got questions coming in. All right, and we're gonna get to your questions. Keep your questions rolling in. I repeat, keep your questions rolling in. We're gonna get to them at the end. And I hate to break this, so don't go anywhere. News. Don't go nowhere, yo. This is not even the best part. Here's what you're gonna do. Listen closely. You're gonna go get a pencil and a piece of paper. Grab your kid's notebook, grab their MacBook or something, because you're gonna need what we're about to get into. I'm telling y'all, don't say I didn't tell you. Don't go nowhere. Right now, we making bulk smooth. Watch stuff. Take this. I'm finna take this thing off.
Don't do it to him.
My shirt off, baby.
Don't.
You know why? Y'all know he rap. Now when y'all hear Joe verse, know he coming from a real place. Hey, News, play the song. Taking my shirt off. Play it.
See, your problem is you can't see from that floor you on. You ain't know what was coming. We seen it though. Ow!
Entrepreneur status, we cut from a different fabric. I still remember hiding that stuff in the kitchen cabinet. The label really started from nothing and made magic. Now we seem to get attention, it's like to parade passing. Wave, when it's pertaining to business, you gotta tag us. Creating our own resource, grateful to pay taxes. A different bracket, and believe me, I ain't bragging. I'm just glad that I achieve things you can only imagine. Signed to a label, fit for a king clothing. We had it up for purchase, quick as the store opened. And gee, I still remember all the moments that we spoke about our goals on that bunk in the pen. It seemed hopeless. We had to learn the ropes with nobody to coach us, to show us how to move in a room full of roaches. Why I made sitting in the room next to Joseph. When you a millionaire, you can't forget about the culture. Let's go.
The work of a hustler is never done. They gon' say you change when you level up. Sometimes when you on the grind, you gotta leave old things behind and do what bosses do. View what the bosses view. You gotta sacrifice. You wanna move like bosses.
I view from a different angle where it's all about perspective. With a hunger that's inspired by moments I've been neglected. Familiar with the struggle, but trust me, I don't accept it. I live by the word, it's been proven and effective. Starring movies for the reckless. Tools gon' be next up. My enemies became a footstool, I done stepped up. It's either sports or we be on Fox when they arrest us. These boys in the hood getting shot, Morris Chestnut. I took a lot of L's, but luckily learned from it. You a boss when you lose everything in return from it. The cost you have to pay is extreme, you need money. And the problems Biggie said it would bring, I seen coming. When you winning, they get nauseous. Friends that make you cautious. Got a lawyer that's on standby the minute that you cross this. My pack I stand connect, got me dripping like a faucet. You know I can't forget Max Walker, we some bosses.
The work of a hustler is never done. They gon' say you change when you level up. Sometimes when you on the grind, you gotta leave old things behind and do what bosses do. View what the bosses view. You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association. Joe.
Basement style meetings, we too urban for the golf course. Discussing where to invest a few million offshore. As long as you an employee, your life is not yours. A boss cut his own check, don't wait for someone to write yours. I'm just a big advocate on entrepreneurship. Learn from mistakes of what previous entrepreneurs did. Poverty's a disease, I understand what the cure is. Let me get back to the focus of the core. They say I'm a workaholic, but they helped me buy my mom her dream. Mercedes-Benz, so like a dream when I bought it. She broke down in tears when she saw it. Anyone can visualize the roadmap to success, but a boss draws it. It's 4 things that'll help you get your dollars up. You plan, you pray, you execute, then you follow up. Who do you contact to become a millionaire? If it isn't Joe Wallace, then who else is you calling up?
The work of a hustler is never done. They gon' say you change when you level up. Sometimes when you on the grind, you gotta leave old things behind and do what bosses do. View what the bosses view. You gotta sacrifice. You wanna move like bosses move.
Yeah.
Welcome back.
Yeah.
Like behind the art. That boy just took the shirt off.
Look, I'm bossed up. Look, I told you guys, y'all hated on my button up, and now I'm back.
We sung the whole song from beginning to end.
A boss like his own shit. So when you boss up, you can wear what you want to wear. I don't even got no pants. It don't even matter, bro.
Level up. Hey, y'all, welcome back to Life Behind the Art featuring Joseph Wallace. This is the Art of Credit. And man, did y'all just see that video? Boss Moves. Harris featuring Joseph Wallace. Yo, that single right there has been doing great things. It topped that #3 on the Billboard charts, and it's continuing to make accomplishments. So make sure you go support that. Y'all didn't know Joe Wallace had bars, did you?
Yeah,
serious.
Man, that was a wonderful video too. Who shot that video?
Hey, Smither A. Lee, that boy there. Listen, man,
I had to give him his credit. I had to shout him out.
Smither Lee, we love you, dude.
That's right.
Smither Lee, man, he did magic with that video. Siege, thank you too, man. You just enhanced the video so much. And just by a few seconds at the beginning and towards the ending, that just man.
I appreciate y'all. Shout out Al Harris. Love you, boy. We
That's
out here
right.
with
That's
tank
right.
tops on, talking tank tops and credit, baby. Let's get it.
Hey, that's it. Take
Hey,
credit.
I would like to add something on that video. I want to share a story. Earlier, Terrence asked, why did I become an entrepreneur? And I didn't really extend on that, but I want to share a story real quick. This past weekend, you heard in the song, I said it helped me to buy my mom her dream Mercedes-Benz. It felt like a dream when I bought it. And so me and the family was going out to Nashville. So I called my mom and I was like, hey, Mom, we're going to Nashville. Won't you hop in that Mercedes and come on out? And she was like, okay. So, and she drove out and we were going to eat. This was on Saturday. We were driving to eat and we're talking about like my childhood. And she was just saying how proud she was of where I'm at in life. And I told her that I could go back and think about in Miami when you're like in a low income area. I try to stay away from that project word, but in a low income area, and she used to take us in a car and drive us out on the beach and show us like these huge houses. And when you come back and you growing up, you know, back in like the 80s and the 90s, the only thing you seen on TV was like Good Times. And what was the other one with the, you know what I'm talking about? Willis. What was that?
What's called Blind Blank.
Different strokes. So you may like it take us to think like, okay, this is the type of life that we live in, and because this is what's being portrayed us also on TV, and this is like the actual environment. But then you see this, like, wow, these people live like this. So there's ways to achieve that. And then when my mom took us out, they're like, man, these people actually live out in this area. And when you drive around and, you know, back in the 80s and 90s, like Miami Beach was segregated. So like the majority is like Caucasian out there. And so it makes you think like, you know what, if it can be done, it can be done. And as you growing up, you start to see like there's successful Black entrepreneurs, successful business owners that's doing it. So like, you know what, if they could do it, I could do it. So I tell people that follow me online, what I'm doing, all you have to do is follow the process. People, they hear it, they'll watch this, they'll get all amped up and excited, they'll start a process, and then it just dwindles away.
So we got to make sure that this is something that lasts. We got some great questions. We got some, man, Joseph, man, you on fire right now. We want to definitely get to these questions. There's a great debate. There's a great debate in this world. News, what is the great debate?
Man, it's a serious debate.
Okay.
It's good credit better than cash flow. And let me expound on that a little bit. And when I talk about it's good credit better than cash flow, a lot of people, rather than paying off the credit card debt or any other debt that they may have, rather save that money and establish an emergency savings or just have that extra cash flow coming in instead of paying off that debt, and they carrying that debt with them. Right, and so they may reach the goal of $6,000 in savings, but they have $20,000, $40,000 in debt, credit card debt, and whatnot. So what's your thoughts about good credit compared to cash flow?
It's a good one. So I'm the credit king, so I'm going to side with the credit side. I love cash though, you know, cash rules, but how many people could go right now and buy that $200,000 house with cash? How many people could go and buy a brand new car with cash? So we always have to look at the importance of credit. It's a necessity in today's financial environment. You have to have credit. You have to have good credit. I mean, anyone could get credit and have bad credit. It is important to have good credit. I can't stress that enough. So to answer your question on is it better to have good credit better than cash flow? Good credit tops cash flow. I did a post that said I don't want my money sitting in the house. You got to go out there and work. right? So that money, just because you have money and trying to save it, is good. Save a percentage of it. If you bring in $2,000, save a third of that, or save like 15 to 20% of that. Save money because you gotta have that safety cushion for things like the COVID. But if you're trying to like just put up money and put up money and put it under the blanket, under your mattress, and no, that money has to go out there and work for you. If
Mm,
you're trying to sustain wealth, that money has to work. You're not going to create wealth by putting money in a bank into a savings account and getting 1.5%, 2% return on it. That's not going to happen. And if you work a 9 to 5 and you're putting money in a bank, you're not going to create wealth. The only person that I could say that could create wealth by doing a 9 to 5 and saving money is that person that has a life insurance policy that when they pass on, which we all will, and they're going to leave their children with a substantial amount that's going to carry on, but not just leaving them with a substantial amount, but make sure that they have the education or that trust dictates how those funds need to be used and allocated.
but dang, who wants to give? I gotta give you this, but when I give it to you, it's like a bee. The bee, like, man, I want to sting you so bad, but as soon as I do, I'm dead. Like, you know what I'm saying? Like, I want to give you will so bad, but I gotta die first. Like, that's
Mm.
crazy. We could have that as an addition, have that also. But man, I love the way you put that. So credit. All right, I'm gonna tell y'all, get your papers out, get your books out, because
Yeah.
we're about to weave into something. Because you said a lot, and that didn't make some people happy, bro, because they're like, wait, I got if I got cash, I'm putting somebody in front of their computer, right, like smacking their hands real hard like this. If I got cash, how you gonna tell me that? That's how we feel about that. So I'm telling you, bro, you're gonna have to take us somewhere with this credit thing, and that's what you siding with, okay? So now it's gonna get good for y'all. Keep in mind, I promise you. But I have to ask you this first, because there are a lot of entrepreneurs that are viewing us. Um, how does you talk about credit, but there's another side to it, business credit. What is business credit? Is it different? And how does it relate to personal credit?
Right. So your business credit, the difference between consumer credit, again, your consumer credit is based on that FICO score model, which they take that information and produce a credit score for your consumer credit file. Your business credit is when you have a business, whether it's an LLC, a partnership, that business has established credit. That means that that business have either a Dun and Bradstreet number and there's credit attached to that, or that business has created scores where it has an Experian credit. There's multiple ways of creating business credit through, like, people hear Experian. Like Experian, it reports consumer credit and business credit. The difference between the two is your consumer credit is attached to you as an individual, and your business credit is attached to that business, and it's separated.
Mm.
It separates you from that business.
What is done? What is Dunn's
Okay.
the Dunn's number?
So
Dunn's
your DUNS number, so Dun and Bradstreet is an organization. If you think of FICO, how FICO controls your consumer credit file, so everything I do based on my payment history, my debt to credit ratio, all of that is what happens. That information and data creates my consumer credit file. My DUNS number is almost like that Social Security on my consumer credit file. It's like that Social Security on my business. So the trade accounts that's created and build up payment history, debt to credit, that contributes to my DUNS score. So your consumer credit file ranges between a 300 and an 850. Your DUNS number ranges between 0 to 100. So if I have like a 750 consumer credit file, which is considered excellent credit score, I could get to an 80 DUNS number and that would be considered that I have excellent
Mm.
business credit.
so so
Okay.
so so when we build in business, right? Now we have to understand these concepts and constructs of personal credit, because now that's also applicable or applicable, have you said the word, to business.
Business credit.
Also, we have to use those same principles in business, and now you're creating your DUNS number and that same history, basically the same practices that we have in our life. we have to be able to apply it to our business. So we have to have this information if we plan on getting a leg up in the business and the entrepreneur world. It all ties hand in hand. That what you telling us?
Yes, and that's correct. And one point that I would like to stress is I know a lot of people say, you know what, don't tie your social security number to your business. Don't use your social for your business. Keep them totally separate. Go through a tier 1 process, tier 2 process, build up your consumer credit file, and that's fine depending on what your goals are. So this whole conversation that we're having right now, it all is dependent on your goals. You may be that individual that, you know what, I'm fine with working a 9 to 5. And that's totally perfect because 90% of our economy is built around having employees. You have to have employees. So, and if that's your goal, if you're fine with that, that's fine. But that 10% of people that say, you know what, I want to create a dynasty. I want to create a legacy. But they're being fed the information like, don't tie your social to that business. If I'm going to start with tier 1 credit and go and get a vendor account and I get to 80 done, I may have excellent credit for that business. But at some point, when you get into the major leagues and you start going into banks for a business loan, when you start applying for credit cards with American Express and Chase and Citi and Barclay, 1,000%, I guarantee you, they're going to put on that application your social security number. And even though some of those accounts may not report on your consumer credit, it will add an inquiry on your credit because they're going to check. They want to make sure that the owner of that business know how to manage good credit, because if they're going to lend to you for this business, well, how does the owner, how does that personal guarantor for this business, how does their credit look?
Right, Coach. We are the owners of the business, or the walking example of the management, the operations of the business, right? And so I know some people have questions like, oh man, when I went through organizing and structuring my business, you know, I found my articles of organization, you know, I did my operations agreement, I got a EIN number. So tell us what differs an EIN from the Duns and Bradstreet, because a lot of times people, entrepreneurs, just starting out think the EIN is enough, you know. So what's the difference between EIN and Duns and Bradstreet before we move to the next question?
That's an excellent question, Terrence. See, your DUNS number, just to go back to that, that's it. That's how you're going to establish business credit under that DUNS number. That DUNS, it creates that number that's tied to that business. Your EIN is almost like, and it's not even almost like that, is how you're going to report the tax for that business under that EIN, because you file your EIN with the IRS. Everything filed through the IRS is for what? Tax purposes. So that's how they're able to track and manage that business to make sure that you're filing accordingly for that business. Two separate things.
Okay. Man, listen, this is the moment, y'all, because we've been playing long enough. All right. News. I need you to hit Joe with the question, man.
Oh, this could be a big one.
This can be like, I think this can be like this. Understanding this, man, can change everything for a lot of people, and it can, and that's how a lot of people out there in the world. Not a lot of times it's not us. We don't, you know, the minorities and our underserved communities and marginalized. We don't really understand these concepts, and this ties into your why you feel like credit is better. But News, what you got for us, man?
Joe. So tell us about leveraging credit. I mean, we talked about the importance of credit, and so if I work and get my credit right, what can I do with it? How can I leverage it, and what does that exactly mean?
Good. Now, is this for from an individual or towards a business?
Let's start with individual.
Individual, yeah.
Okay. How do I leverage my credit as just an average consumer?
Joe, let's talk to Takina. I see her name on here.
Okay.
This is Takina. So Takina's trying to leverage her credit.
Okay, Takina.
Takina. I hope I'm saying that right. That's her name today, Takina.
All right, Takina. Good evening, young lady. So, if you have excellent credit and you want to leverage that credit, I always start off like, what are your goals? And are you trying to purchase a home? Then you could leverage that credit into buying a home. How? Is by, if you say you have good credit, you're above a 700, then you want to get the best program. That means that the interest rate should be lower for that home. That means that you should be able to save money every month. Because if I have a 580 and I'm getting a 3.5% down that I have to pay on a FHA loan with a 3.5% down, I may have a higher interest rate. With you, Takina, may have a 700 credit score and your interest rate is lower than mine. So that $1,000 that I'm paying per month, you're paying $850 or $900 per month. So that extra $100 that you're saving per month, guess what you can do? School right now, back to school clothes. That 6 months of saving, that $100 is now either been put in an investment, which you could pull and attribute the interest or return from that into your children's school clothes. When Christmas time come around, that savings, instead of you having to save up for that or try to max out a credit card for Christmas time, guess what? Now you have that your credit, you have leveraged your credit and the savings into putting that into your children's Christmas. So it all think of longevity, those savings over a long period of time, me saving that $100. Imagine if I had saved that $100 for 3 months and I had bought one stock in Tesla back in February or March when I was just going out. Hey guys, check out Tesla. It was down to $450. Now it's like $1,500. You would have tripled your investment. Imagine you would have continuously done that over and over and compounded that investment over and over. Now we're talking about wealth building.
All right, business. You on fire. All right, we taking the credit. We as a person, I have better credit. I can get better rates when I'm intentional about it. Because going back to what you said earlier, how do we reduce debt and all those things? Well, we have to be proactive. We have to be intentional about it. We have to have an understanding. I'm intentionally building my credit so I can intentionally save funds in strategic places, take those and utilize them and let them work for me, right? So now we have intentionality with it. Now talk business. How do you leverage credit for business?
I like what you said. I'm going to answer that. I look at life like a map, right? So you don't know where you're going to end. Right now, we're in the upstate. And I could say, hey, you know what? For the holidays, I'm going to go home to see my family. And so your whole life should be projecting always. What are my goals a year from now? What are my goals 2 years from now? Where do I see myself 5 years from now? And all I'm going to do is come back here, because for me to think, how am I going to get to Miami? Am I going to drive or am I going to fly? How much is it going to cost me? What time does that flight leave? What time am I going to land? Do I need to get a rental car? How long am I going to stay in Miami? When do I need to return? All of those things, you're creating the projections and planning right there. And that's how you treat your life.
Yeah.
Like if you're driving, you say, okay, I'm driving this car. This car should get me from here to probably Tallahassee on a full tank of gas. So I'm going to need $40 to fill up my car by the time I get to Tallahassee. And then to get down to Miami, I'm going to be on E again. So that's going to be another $40. How long am I down there? How much driving am I going to do? All of this is planning. And if you treat your life like that, like I'm constantly planning, because it's not always going to go as planned. I may catch a flat. I didn't expect that. That's life, right? And I'm just as an analogy. It's always going to be something that happens, but I have to be prepared to pull over. I got my spare in the back. I'm going to change it out, and I'm not going to turn around because this bad thing just happened. I'm going to continue on my path. I'm going to get to Miami, stay on my path that I planned out. I'm coming back as planned. So I just want to make sure that people understand that is your entire life should be planned out. And when things kind of take you off that road, then you just step back, you analyze the situation, you create a different strategy, but you continue back on that path.
Joe, you just made me put my shirt back on, bro.
Yeah, he literally did.
You made me button it back up because now I feel so together. Like it's a lot happening right now, man.
Man,
Oh man. Okay.
I feel hot in the office and it's on 70 degrees right now.
Listen, I mean, I just
It's
felt
good
like,
info.
I don't know, man. That does something to me because when now we're talking about strategically and intently, setting the course for our lives and our future and for our kids, and then they see it and it becomes part of you. Like, think about the way you broke that down, though, man. Like, how many things that we process and plan to do small things or
Right.
everyday things, but we don't put any amount of process and planning into the things that affect our livelihood and our lifestyle the most, right? And a
Right.
lot of it is just staying on a call for an hour
Yeah.
and whatever gonna come on in a little bit or whatever. Sometimes that's the barrier between, something great and staying the same. Is literally this. Is literally that's why I had to put my shirt back on. So can I say this, right? You kind of answered. Let's just go into some questions, okay?
Yeah.
Let's go into this question because you every other question we have for you, you honestly have intertwined and kind of answered it. So, News, man, give us a question. Let's get into some questions. We're gonna get into this quick fire. We're gonna get off here. Y'all gonna go visit. He on East Blackstock Road. You know what I'm saying? Right next to right across from what the Thai place right there, Firestone. I'm trying to tell him what's
Goodwill. Right across.
Goodwill. Right across from
Okay.
Goodwill.
Yep,
I
they're
got
across
this
the
from
street.
Goodwill. So trust me, it's right across the street from Goodwill. Hey, News. Give us some
Check them out, man. Check them out. And so I have a quick question from Randy Erich Jr. Let's see. Cars. How do you view auto loans? Do you see them as a necessary way to build credit or something to avoid because of the quick depreciation of the value?
That's a good question, Randy. That's a real good question. Do I see it as a way to build credit? It's definitely a way to build credit, especially if you don't have any installment on your credit. Then that's a way to build credit. When I see auto loans, I always see things like the value of that asset and what am I paying to obtain that value. So what the answer to his question is, you got to look at the interest rate. And that's always when you see an installment, what's the interest? How much am I paying for that? Because if I'm going to obtain that asset at a high interest rate, it's a good chance that it's going to depreciate faster than I could pay it down. If I obtain that asset at a low interest rate, then when I get ready to sell or trade, then I could possibly make a profit off that. Because there's multiple car dealerships out right now that advertise if you got good credit, guess what? You could drive off in this brand new 2020, no money down, 0% interest rate for 60 months. Guess what that does? In 3 or 4 years, now I have paid that debt down where the loan amount that I own on that car, the value of the car is higher than the loan. So I purchased that car and I owe $20,000 on it, but the car is valued at $27,000. So I could either go and trade that car in, and they're going to say, well, we'll give you $27,000. Guess where that $7,000 go? It goes down to lowering the balance of that new loan. See how I'm setting up my future? That
you
one
year
is I'm going to continue this pattern to improve my future.
Right. And then so from that perspective, like, but if going out and getting the car is just adding to your debt and adding to your, you know what I'm saying? It may be a better idea to save up $5,000 and go buy one versus, I mean, you know what I'm saying? Maybe that's kind of
your budget. It goes back to your budget, because if you understand how to budget, then you know if that new purchase is affordable for you or not. It goes back to budget. And Randy, the second thing is you do not go to a car lot and allow them to run your credit multiple times. Right? The only time you want to go to a car lot and allow them to pull your credit if they're going to apply for that vehicle under their financial institution. So if I walked into Mercedes and I know Mercedes Financial is going to pull my credit one time, I'm going to get that great incentive that they're offering that brand new Mercedes at a 0.9% interest rate. Now I'm going to Mercedes and allowing them to pull my credit because I'm going to gain an incentive from it. If not, I'm going to my bank. And my bank is going to pull my credit one time, and I'm going to take that pre-approval to the car line, like that vehicle right there, here's the pre-approval for it. Guess what? I'm in and out of that place in an hour.
Yeah.
That was one of the best feelings in the world being able to do that.
Yeah, right. Let's keep going. We have another question from Rochelle. So, what are ways to build revolving credit?
Ways to build revolving credit. Two ways of saying that. If I have no credit, I can establish a secured credit card. I think that's the best tool to build revolving credit. If you do not know, you can again contact Masters Credit Consultants. We'll do a free consultation and we'll advise you on what needs to be done to help you establish revolving credit. Not just throwing out something that's broad. It will be specifically based on your credit. The second way is if you already have like one account, there's ways to get a pre-approval on a credit card. So before I just go and dump an inquiry on my credit and don't get approved, now I just wasted an inquiry that's going to drop my credit score down 3 to 5 points. I'm going to apply for a pre-approved credit card. And after I'm pre-approved, not meaning that I'm 100% approved, but it increases my percentage of getting approved for that credit card.
Man, listen.
Okay. Yeah.
Any more news?
Yeah, he's nailing it. Yeah, we got a couple more. So we have Takina, who we talked about earlier, and so she's interested in creating her own credit repair business, and she want to know, do you do mentorships?
Man, you know, back when I first started, right now, it's like I feel like Jay-Z, that there's no time for nothing. It's like all about creating these multiple streams right now. We're working on this new venture right now, and that's taking almost like a third of my time. So not at this moment, but I'm always open to answer questions though. So if you have questions, always inbox me. My inbox, I think I'm at like 200 something right now, but I always get back to the messages though. I'm like 2.5 weeks behind right now on my Facebook inbox, but message me 100%. I will get back to you.
Yeah, make sure you do that. To get a message him, reach out to Masters Credit Consultants. Make sure you follow up with him, and he will get back with you. We have one last question from Tierra. We was talking about generating wealth, and we spoke about Tesla. And so Tierra want to know, what is Tesla?
Oh man, Tesla. So Tesla right now is a company. They are very innovative. They focus on right now. Tesla is a vehicle. That's one thing that Tesla has, but they really focus on battery operated vehicles. So it's a vehicle type. That's what Tesla is. They also just launched a new space program. So that's why we constantly see that Tesla stock increasing, and it's projected to increase another 200% over 2020. So it's definitely not a stockbroker. I can only say for my own personal investments, I have seen nothing but a gain from that stock.
Right. And to get I can speak on that. Like Tesla has really, that stock has done great things for my household, just to let you know. And so it's really important to if you want to allow your money to work for you, research, different stocks, look at things that you can make a good return on your investment. And because as I'm learning more and more, I'm seeing that these things actually work when you apply them, when you apply the knowledge and wisdom, right, and seeking those resources. So research the stock market, research different things that can help generate wealth for you and your family.
Hey man, listen, this is I hope you guys have enjoyed this as much as I have, just sitting here listening. Man, from Tesla to just being intentional, right? I'm gonna be the first person on the block with a Tesla spaceship when they come out. Just know that. That's my goal. Joseph, you have one sentence, one answer, really quickly. You can't think. News. I'm gonna go first. You go second. We're just gonna go really, really fast. We got 2 minutes to be off this. 2 minutes. Really fast. News. Are you ready, News? I'm going.
Let's go. Let's do it.
Fire them off back to back. Here we go. Joe, if you could change one thing about Spartanburg, what would it be? One sentence. Go.
I would increase the housing for low-income residents.
News.
Okay. What's your favorite thing to do after a long day of work?
When I have time, I like to spend time with my family, and I like to meditate. I like to stay connected to that Holy Spirit.
Okay. That's what I'm talking about. What keeps you motivated?
my friends and family, and just seeing everything that God, I see that it's real, you know. So I pray on it, I plan, I pray, and I execute. And when I see it come to fruition, then that's what keep me motivated.
That was his bars, by the way.
Yeah, he threw it in there. Okay, if you had $1 million in cash, what are the first 3 things you would do?
Quickly, one answer word, one word answers.
I will start. One answer?
No.
3 things. 3 things. One is I would start a company. I would start another company and take a third of that and hire a director, a manager, supervisor, and staff, and that's trained, and allow them to operate that company where I could draw a return off. I would take a third of that and invest into stocks. I would kind of duplicate Warren Buffett. Pay attention, guys. And I would take the other third and I would distribute that amongst my family where they can start new businesses too.
Man, that's what I'm talking about. Man, we family, baby. All right. Who is one celebrity you would like to have dinner with?
Barack Obama, if you consider him as a...
I do, because that's probably my answer too. News.
Right. If you had one last message to leave to the world, what would it be?
Have faith. Faith. That's the biggest thing. I see so many people have brilliant ideas, and it's just that lack of faith. We may not realize that we have lack of faith, but if we start something and we pray on it, and if it don't go as planned the first time, I see so many people just give up. But when you have faith, then you know it. You know it. So I would say, like, you have to have faith in everything. When you plan out something, if I say I'm going to get from here to Miami, I'm going to get there. I got faith that if the flight is delayed, I'm still going to get there. I know they're going to make some type of arrangement to move me to a different flight. I'm going to get there. So I always have faith, no matter what God put in front of me, no matter how many challenges that I experience, I always keep that faith and know that it's going to come to light.
Man, listen, y'all. This has been Joseph Wallace, as y'all can see. Man, a man of faith, a man of vision, a man of intent, a man of knowledge. I mean, just awesome man, a man of family, a man that understands the art of credit. Go to masterscreditconsultants.com. Get your free consultation. Do it right now. Tell them Siege and News sent you. Tell them you.
So we can get our referral fee, baby.
That's it, baby. You got referral shopping. Tell them we sent you, okay? Make sure you guys do that, though, man. Get a leg up. In this world, it's time for us to get ours. Go out and get yours right across the street from Goodwill. You'll see like 7, 8 Mercedes out there. Them his, all right? That's how you know you're in the right place. They all black all the time. All right, go out there and holler at him. Go holler at him. He's going to be in there working, I'm sure, all night long. Man, get you some rest.
Hey, it's masterscredit.com. Masterscredit.com.
Okay.
So Masters, but that's the name of the company, Masters Credit Consultants. That's right. But it's masterscredit.com. The number is 864-249-9466. That's 864-249-9466. Monday to Friday, 9 a.m. to 6 p.m.
249-9446. Is that what it is? That's the slogan. So everyone go get 249-9446. So that's Hey, run that, because you said leverage. Run it. 249-9446. All right, y'all holler at him, man. Holler at him. Y'all know the number. What's the number? 249-9446. Holler at him today, man. This is Life Behind the Heart. We are Elephant Group. That is Joseph Wallace.
Thank you.
.com. Call him today. 249-9446. We love y'all. Thank y'all for tuning in. See y'all next time. Jill.
Life Behind the Art. We out.